Hi everyone, I'm Larry Levin, President of Trading Advantage, and welcome to the next YouTube video. Today I want to title this video Warren Buffett. I've spoke on Warren Buffett before, and I don't want you guys to get the wrong idea. I'm a fan of Warren Buffett's. I love learning from Warren Buffett. I've learned a lot over my trading career from some of the moves that he's made, some of the really slick moves, to be honest with you, the things that he's been involved in, the amazing things that Berkshire has done are incredible, and I wouldn't take anything away from it. But I will say, when I see things like I saw today, Warren Buffett spent 3 hours on CNBC's Squawk Box show. That's 5 a.m. To 8 a.m. Central Time here in Chicago. So I watched pretty much the whole show today. And the one thing I see from Warren Buffett that I see time in and time out when they talk to him in the media is something that I think, to be honest, is bad for you guys, okay? And I hate to say this because I think Warren Buffett does have a lot of good things to offer, but when I hear him say something like I'm about to tell you, where he talks about stocks, and they asked him specifically about Coca-Cola, or about Pepsi, or about Berkshire, about really a bunch of different stocks that he has, and he kept saying the same thing. He said, if people have money, they should buy stocks. I don't know where they're going to be 6 months from now. I don't know where they're going to be from a year from now. They could be 20% lower. If I've got more money, I'm going to buy more stocks. Well, that's great for Warren Buffett, right? Warren Buffett's got the deepest pockets out there. He's the second richest guy, really, in the world. Okay, so it's easy for a guy like that to say, okay, I buy here. If it goes down to here, I'm going to buy more. If it goes down a little lower, I'm going to buy some more. Well, for those of us out there, for those of us who are learning to be investors, those of us who don't have a ton of money, don't have Warren Buffett-like money, and really who of us do, how can you give people advice like that? Where's the risk? Where's the downside, okay? Telling someone to buy stocks, and if they're 20% lower, buy more. Well, that's great if you got a ton of money, but what if you don't? What if you're like everyday Joe on the street? You're not some big Wall Street executive or the Warren Buffett type guy, and you don't have money to do that. Where are you wrong? If you buy something and it's down 15%, should you get out? If it's down 20%, should you get out? Warren Buffett says no, buy more. Well, that's great advice for him, and that's, I'm sure, what he does, and that's easy for him to do because he has such deep pockets. He can buy as long as it goes down. It falls, falls, falls. He buys more and more. It finally goes up. He makes a fortune. The little guy doesn't have that staying power. And so when I hear him giving that advice, I don't know where stocks are going to be 10, 15 months from now, but I know eventually, 5 years, 10 years, they'll be higher. Well, what if you can't hold on? Okay, what if you buy here, goes all the way down to here, okay, and you can't hold on? The broker gets you out automatically because you don't have enough money to hold on to a losing position. That's okay for Warren Buffett. It's not okay for you guys, and I really want you to think about the risk when you put on investments. When Warren Buffett says something like he said this morning, I'll be honest, I'm frustrated with it because I don't think it's teaching new investors what they need to know. Okay, and I know Warren Buffett's kind of against that short-term trading. He doesn't want somebody in for 3 or 6 months, and that's great and everything. But regardless of whether you're in for 3 months or you're in for 3 years or you're in for 30 years, you have to know where your risk is. You have to know where to get out when you're wrong, when it's too much. And I don't see that coming from Warren Buffett. I see a lot of other good pieces of advice, but not the part about the risk. And the risk is the most important thing. So I want you guys to think about that when you're investing, when you're trading. Always think about the risk. All right? Thanks.